Hi, this is James Shrug with Westpac London's end of day report for Tuesday, October the 16th. And it was a very positive day on equity markets today. We had earnings results and other company information that was supportive. Goldman Sachs beat analysts' expectations. Johnson & Johnson lifted their profit forecast for 2012. Vikram Pandit, he's leaving Citigroup. That saw their share price rise 1%. And Rio Tinto announced increased iron ore production above their previous estimates. So a range of, and there are plenty of other stories as well. Johnson & Johnson I mentioned. In fact, I think so far we're looking at about 35 of the 50 odd companies that are reported so far beating analysts' expectations. So the earlier concern that this would be one of the weaker earnings seasons since the recession of a few years ago, those concerns seem to have diminished somewhat. And there's a lot of economic data out today. The CPI in America rose 0.6%, largely lifted by energy prices, but the core rate for the third month running was just 0.1% in the month of September. So benign core inflationary pressures despite that blip, largely due to gasoline. Industrial production rose just 0.4% in September from a very weak minus 1.4% in August. Auto production in particular has been a drag there. Home builder sentiment continued to rise to a new 6-year high. We had Canadian manufacturing sales up very strongly, 1.5%, driven by autos and energy. On the German ZEW analyst survey, the expectations component of that posted a second consecutive gain, even though the current conditions component fell further, in fact down for 5 months running. So basically German analysts are feeling a little bit better about what the ECB has done, but they're worried about the state of the economy that they're in. And inflation in Europe was revised down a tick from 2.7% to 2.6% in September. On exports rose 3.7% in August. That's exports out of Euroland. Imports are up more than 2%, yeah, 2.1%. But you know, there's still some signs of life in the European economy if they can deliver that sort of export gain. Inflation in the UK slowed from 2.5 to 2.2%. That's the lowest it's been since 2009. In fact, the closest it's been to the 2% target since then. There's some scepticism that inflation can fall much further in the UK, and that's why expectations for a further round of quantitative easing from the Bank of England have dampened a little bit ahead of the next meeting, which is in November. But I think one of the bigger drivers of markets today was the announcement by various German politicians that they would be amenable to Spain seeking a line of credit, or a precautionary line of credit, from the European Stability Mechanism, the bailout fund. That would then come with conditions. Okay, they wouldn't actually get the money, but they would have a line of credit created. That would come with conditions, hopefully not too austere, and it would then, that conditionality would allow the European Central Bank to buy Spanish government bonds. Now there's been no announcement yet, but the fact that the Germans seem to be softening their stance, because remember they were against Spain applying for a bailout, well, up until these comments came through, that softening of the German position has certainly given European markets a boost. So they're the main news stories of the day. In terms of equity markets, the FTSE in London up 1.1%, Rio Tinto of course part of that story. The French market up 2.4%, the Germans up 1.6%, the Spanish market up 3.4% today, and the Italians up 2.5%. And heading into the US lunchtime, the Dow is up 0.9% at 13,548. Commodity markets haven't done so dramatically. We've got a 0.2% loss in the oil price, $91.67 a barrel, 0.1% down for copper. Gold's up 0.5% at $1,746 an ounce. The Aussie dollar, it's at 1.027 against the US dollar. It's just crept a little bit higher. We've got Westpac Melbourne Institute leading index coming up on Wednesday, Sydney time. So another little bit of data to tell us about how the economy is going. Remember, Even though the Reserve Bank minutes yesterday didn't hint at a further rate cut, we think there's another one coming in November. Okay, back with more tomorrow.